I wish I didn't do it. And in trading, I didn't get the confirmation before I entered the trade. Why do I do that? Oh, I think that was last week. Is it last week? Yeah, this week is ending. Yeah, last week. I spotted a confirmation on gold. That's a bullish confirmation. And then I went in. It gave me take profit 1. Because of the way it was running, I was holding it, expecting take profit 2 or 3. It couldn't work like that. So at the end of the day, I just have to allow it to hit my stop loss. So after the whole scenario, after the whole scene, at the end of the day, what happened? Look at the charts on 30-minute time frame. I was like, oh, Mark, you messed up. That is head and shoulder forming. And when head and shoulder is forming, you are expected to go in for a sell. But why did you buy on a neckline? All right. So I went to 1 hour time frame. I was like, oh, yes, it's head and shoulder. All right. So I could have get TP1 benefits and allow the trade to run. And it's a regret. And why was it a regret? It was a regret because I took a sell, it gives me the profits, and then it gives me the profit due to a fundamental analysis. And that same fundamental analysis is taking effect. So at that particular point, technical analysis is out of the brain. The brain is filled with, oh my goodness, it's going to happen again. And it never happened, all right? So fortunately, I was using a very low lot size. I was in 0.01, and I entered free entries. So I entered free entries on a hedging strategy or martingale strategy, sorry, and then I lost $62. All right, that's what I lost. Now, in real trading, the energy level is more than the 4. In trading, we have greed, fear, hope. That's one set. Anxiety, depression, and boredom. The boredom is that, okay, Mr. Kwame says, channel bad energy out within 10 seconds. Do you think it's that easy to do that? Can you just channel your bad energy within 10 seconds? That's the question, all right? So the truth is that at one point in time, we must work on these little stuff. The truth is that if you are in a marriage, if you are married here, or you have a girlfriend, or you have a fiancé, and you can work on your bad energy within 10 seconds, you won't slap your wife. You won't slap your wife to the extent that she will pour hot soup on you. And at the end of the day, both of you will sit down and be looking at each other. So why do I slap her? And then why should you also pour hot soup on me? You know. So it's funny in trading. It happened as well. Okay, so when we actually come to risk management, which is theoretical topic on its own, you're going to treat all those things. A lot of people are trading Forex, but they are gamblers, even though they are good in technical analysis, but they lack risk management. So thank you so much for your time. I'll start doing some assignment these days. And those who voted for me for my coin last week, Monday, thank you so very much. My coin is listed on CoinSniper now. I'm very, very grateful and I appreciate your time. Those who didn't vote, please sometimes be kind, okay? It's very, very good to be kind. Thank you so much. Okay, so we always look at, as usual, I don't know if it's my ritual, but I like to look at my favorite assets and then see how they are doing before we take the class as usual. All right, so gold. Monday, we talked about this zone, you know, and then we are actually looking at it to come as low as this level, where we expecting that even if you are expecting a sell, a buy, and then you put your stop loss at 1880. Yes, 1880. It will definitely going to hit the stop loss. Please, who is on this class and remembered that particular statement, drop it in the chat box, please. And then later, we extended the zone up to this level. And I was like, in case I even want to buy, then my stop loss have to be outside this region. Now, it is playing out like that. So today, actually, I gave a buy signal yesterday, but I didn't give it publicly. All right. The reason is that sometimes when we give signals to people and we hit stop loss, they come attacking us as if we caused it. All right. They come attacking us as if we caused it. So literally, I didn't give it up. Today, I got some few sell signals and I took some few pips as well. I didn't also give it up because market was not actually giving the right direction, and I was just trying to take some risk. But for the whole of this week, I couldn't really pick trade. Right. So sometimes the opportunities will not come every day. It has to come based on your setup. Okay. And how do you do the setup? This is how you do the setup. And the scenario I was talking about was forming here, somewhere in this level. I was saying we were expecting the buying move and then it couldn't buy, and then it respected by breaking this particular zone downward and then hit our stop loss. Okay, so that is how gold is behaving. So we now wait for gold to, however, it's going to deal with this zone, this whole zone, confirming it to become a support, value support will determine. So we are expecting as low as 1878, then we see the decision is going to make. By that time, it will fully respect the break of structure that occurs here. Okay, now, if you happen not to be understanding all these things, don't worry. Step by step, you're going to approach it slow but sure, and you will get it. Now, BTC, Bitcoin, all right? A lot of people love Bitcoin. Who doesn't love Bitcoin? It means that nobody was here when we talk about gold movement, or you guys are not really hearing me or catching the concept or understanding what's going on. All right, so BTC is still respecting the added support, and it is currently creating lows, creating lower lows. So one of my policy of trading is that this is a lower low, and it creates a high, creates a lower low, which means that this low is lower than all these lows. And at this point, it creates another lower low. which is still lower than this low. So it still creates a lower low here, which is lower than this, this, and this. So definitely, as it is pushing up, the probability that it may end up creating a low lower than any of these lows, that probability is high. And then if we channel a trend line, you realize that one way or the other, it is not really respecting a trend line. But if we draw a trend line, it means that we are going to support that trend line with a control line. So when we use a control line, realize that it's respecting a control line. And at this particular point, on 1 hour time frame, it's more or less like a choking market. It's more or less like a choking market. So if you want to trade BTC, you have to be careful, right? So our support level will be extended to somewhere 3,400 or 3,300. Or the lowest we expect is 3,000. That's 30,000. Okay, so all those projections were done before Bitcoin is coming to this level, respecting this whole structure here in March, February and March. So currently, that's what BTC is doing. Then how is it affecting the market cap? All right. Yesterday, I saw on someone's screenshot that the whole market is bleeding. You know, it's Manchester United bleeding. It's red. All right. So when we are trading, even though I'm a Man U fan, but if I'm trading, I have to be a Chelsea fan because I love the blues than the reds at that particular point. All right. So how is it affecting the coin market cap? So we can see the coin market cap has actually trended down, then giving us, when we compare this structure, this is a 4-hour time frame. Compare this structure, we have seen multiple patterns in patterns. We've seen multiple patterns in patterns and levels, major levels and key levels. So there is a greater confluence of decision making that is working here currently. So we have a structure was broken, which was multiple resistances broken, converted to support, then created a higher high here, or the highs here, respected down here, create a low. So when we look at this region, from this region, this is the lowest. Okay, so at this particular point, we're seeing a low, then lower low here, then two lows on the same level. All right, so we have price support factoring into a zone. Price support factoring into a zone, and that price support becomes a value support. All right, then after that, it created another layer of zones at this level, respecting another break of structure here. So if you want to take all this structure on a daily time frame or the bigger time frame, you see it as one particular support zone being created. So those who are actually day traders or position traders, they will still be waiting for all this pullback or this reversal happening here. All right, so before the coin market cap actually pushed down from this whole level, it created a zone, these highs and these highs. And let me spot it, guys. So it created these highs, yeah, which is one way or the other validating the structure at this level. So the fact that you are expecting the coin market cap to push up, it is not just going to go there magically. It has to follow procedures, right? So market does not just fall anyhow. It respects protocols, respects levels, project to key levels, and the structure and the condition irrespective. Okay, so like I said, when you grow in or you do research, you realize that It looks as if it's a crime to be a retail trader, but it is not true. Okay? It is based on your observation. So the best strategy I would advise each of you to adapt, take into consideration when you want to trade forex, crypto, bonds, futures, metals, commodities, anything, is your eyes. Your eyes should be the best indicator, and that strategy is called observation. Because there are some times that you master candlestick formation and it's not going to play out. There are sometimes you master patterns and it's not going to play out. There are sometimes you master Fibonacci, it's not going to play out. Other block strategy, mitigation and all those terminologies, institutional order flows, all those things, it may not work by your eyes. So trade what you see. One day, I'm going to do a quiz. Anybody that answers that question will take 2 of my great books away. 2 of my great books. Those books I've not even done reading, but they open my eyes very wide, very big, and I use that eye to make decision. All right, so please, your teacher taught you 1 + 1 in kindergarten. That was the end and the success of your mathematical journey. If you think I'm telling the truth, put in the chat box that, hey, you are telling the truth. All right. You learn logarithm, algorithm, what's the name? Probability, vectors, matrices, and all those stuff. They are basis to even come and solve complex problems. Right? So they are basis to now make you solve complex problems. Are you taught cryptocurrency back in school? No. We learned probability. And those of us who did elective math, we went a little bit far. But I didn't learn discrete probability in secondary school, all right? But discrete probability is what defines the ecosystem we are in now. That you can be able to project the next movement of the internet, the next directions of the world and the ecosystem. The same idea is what projects the financial market. Are there people who don't lose in trade? No, we all lose 1 point in time. But once your winning rate it's becoming more than your losing rate, you are a successful trader. But they have to now become consistency. All right. Sometimes I stress on certain things because that has been the problem. You see people saying that, okay, give you some money so that you'll be trading for me, I will discourage you that, please, no. For my style of trading, I'm not actually favor somebody who wants to make quick money. For the past 4 months, January, February, March, April, May, June, I traded only selected times. I'm still learning. So you ask me, what solution? Oh, the truth is this. Let me tell you one thing. If I learn and learn and learn and learn and learn till September, and I have 90 days for the year to end, if I sit with my computer and I apply all that I learned and I want to make $2 million, I can make it. And it is the truth. How much will I use to make it? I will start with just $500 and I will make sure I make it. And that is one thing. When you understand in trading, you can learn and learn and learn and learn and learn and learn and learn until you are good to go. For example, if you are given 90 days to cut a tree, choose one. Sharpening your cutting equipment for 85 days and cut the tree within 3 days. Or using unsharpened tools, struggling to cut from day one and still won't be able to cut. Which one do you prefer? Right? Before you hear about forex, I am not sure you are not taking 3 square meal. As you hear about forex, you are still taking 3 square meal. Life is good for you. So as you hear there is money inside, do not rush and crash. I was there before, but I don't want you to go there before you come back. Because sometimes when you go there, you can never continue the journey. One bitter truth. So the last time we look at support and resistance. Other Ghana block, my people. Yesterday we were discussing the faster way that some people can start making money, right? ICS members, we have signals at our back office once you are a member, and I still give signals from 2 sides. Ghana block, I'll still give signal, but there are some basic things that you need to know. Apart from risk management, you at least need to understand support and resistance. Okay? You at least, so you can put it down. Probably you don't want to really go far by going with all these jargons and stuff like that. You can just write it down. The basic things I need to know at least is support and resistance. Okay? At least a trend. The trend is, where is market going? Is it going up or is it going down? So that you will not be there and somebody will tell you that, okay, Euro JPY, buy. Then you just jump inside. Maybe you have trusted the person to the extent that you have put in a big lot size. And then it wouldn't go well and you'd be like, oh my goodness, this trading is not good for me. Please, it is good for you. All right. So the trend, where it is going. Okay. Now let me switch to a common journey that we will all be obviously using. That's the MetaTrader platform. And then I'm going to add the Binance very soon, because even my contract company, we trade everything, crypto, bonds, every stuff. All right, so I was actually playing with this trade today, okay, and a friend gave a signal on that blue line, okay. So this is what happened. After the signal was given, the signal was given somewhere here, sorry. Yeah, the signal was given somewhere here. I believe everybody can see my screen. If you can see my screen, let me know. Okay. So the signal was given on this. Let me change the color for this. Let me use green. Okay. So the signal was given on the green line. So I entered immediately. And something happened. Now, when I entered with a standard lot size. That's 1.00. And then market pull up. So instead of the trade just going straight, okay, it did this. Okay, so it did that. After I did that, it come back to this green line again. this green line again on this red candle and push up again. So before it come back, then it came to a little bit here and go back again. So if you are someone who don't really know some tricks, and then you just get the signal here on the green line and you jump in, maybe you use a big lot size, or the asset you are trading, you don't really know the lot size methodology. Okay, this pullback, which is the yellow app alone, can blow your account, but the signal is right. That is the beginning of risk management. Then another set of people, let me now reduce it to 1 minute time frame. So let me zoom in a little. Okay, so when you come to 1 minute time frame, this same trade, some group of people will be looking at this side of it here, this particular side here, and then they'll say, oh, it is going to buy, so they jump into a buy. That's a 1 minute trade. Then before they realize it returns. These particular people who make the decision on the green to buy, they are trading against the trend. So their negative can never be recovered, especially if they don't have big equity to hold that trade for a very long time. That is why there are point in time when you are, those of you on plenty platforms and they give forex trading signal, you realize that somebody say buy gold, somebody say sell gold. Then maybe you don't even know if you should buy or you should sell. But maybe the person who say buy gold is looking at the long term, maybe 4-hour time frame, or it's on the daily time frame. But the person who say buy is on 1 minute time frame. So whatever everybody see and decide in the market is not the same. So when I saw this, I waited. The reason why I waited is that I quickly came to 4-hour time frame. This is 4-hour time frame. And then I realized, I saw my friend. I have a friend. Whenever I see that friend, I trust it, okay? Don't laugh at me, by the way. But I trust that friend. Now, that friend, this is 1, and this is 2. People have names for it, but I call it pin bar. So when I saw that, my friend, I was like, okay, this signal is going to play out, right? So I went back to the 15-minute time frame. Sorry, 1-hour time frame. Okay. When I get to 1-hour time frame, I saw, what's the name of this candlestick? This one. I saw this particular one. And I think that's Harami, because the other one looks bigger. It's swallowed. I saw Harami. It's bearish Harami. I was like, okay, it's gonna sell. Then I went to the 15-minute time frame. Okay, it does not matter the time you use to do this. It's your money you are going to use to trade. So don't rush into it and say, oh, the signal is giving, so let me just jump in. You didn't test the water, you jump into 9 feet, then you swallow the water, then you remain under the water for some time. Then your body will now float out. All right, so I came to 15-minute time frame. I remember what we call impulsive and correction. So at that point, on 15-minute time frame, market has done what we call impulsive to this level. So even though the signal was given, I wait patiently for correction. in this level. And technically, there is a reason for that. So after the correction, I choose to enter from the blue line. Then I put my take profit. Or was that? Let me check where I put my take profit. So I put my take profit at 408355. 4083, somewhere here. Yes. Because I was making that decision on a 15-minute time frame. All right. So after that, a ride straight to my take profit. That is one thing. Now, what is the difference? The difference is that because of the pin bar, which is my friend, others will have so many names, Evening Star, Morning Star, Harami, whoa. I'm able to show that, okay, there is a change in direction with candlestick pattern. Okay, Mr. Kwame says shooting star. Thank you, sir. There is a change in direction due to candlestick structure. But when we look at it again, there's another important thing you want to see here. Let me go. There is another thing that is formed here, right? So let me quickly bring your mind. Okay, DV Forest a teaser top. All right, see, you see the whole thing, teaser top, shooting star. Somebody will come with. So at the end of the day, our identifications are all going to be based on our decision we are going to make in the market. That's why when people are talking of market manipulation, sometimes I don't really buy into it. But when we talk of market manipulation, as far as technical analysis is in concern, I will buy it. Because once people are buying, people are selling, people are buying short, people are selling long, people are doing swing trading, people are doing scalping, people are doing day trading, a lot of things are happening on the same time, all right? So when you look at this carefully, we also see something small happening here. Why I put the green line? Something small happening there. Now, let me change it to line chart for you to see something. All right, so if you look at line chart, you'll see that at this particular point, something like W, which means that a lot of people will be jumping to buy, all right? And then some people also will be jumping to sell. They'll be setting their XL, their TPs. So at this particular move here becomes the manipulation technically. Now, when you go to demand and supply trading, you say it is accumulation. We call it accumulation. They are accumulating fund. So this move will actually push, especially those who are looking at the trade on the 5-minute and 1-minute time frame. They'll all be going to buy. They'll put their stop loss here, put their TP somewhere there. The some people also be going to sell and put their stop loss somewhere here and put their TP here. So they will move in that direction to clear both stop losses, and the trend keeps going down and down and down, right? So you must actually be dynamic in the journey, all right? Let me change this color to somewhere, that color, let me use this. So you must be dynamic in the journey. So we have something here, we have something here, we have something here, we have something here. Now there's one funny thing. Whenever market is moving, I used to say it, the way it moves up, the same way it moves down. But the style in which it moves are not the same. But if it is the same, everybody will know what's happening. All right. So when it is going up, it is uptrend. When it is going up, it is uptrend. When it is going down, it is downtrend. Now, when price is moving up or down, it actually gives a way it moves, or there is a way it moves. So let's take it like this. Let me come to 1 hour time frame and see if I can be able to do something reasonable here. So let's say it moves like this. Let's say it's moving like this, uptrend, and then you are able to get a gutter. Let's say you're able to get a gutter, or you got a space, 2 spaces that it is moving within, like this. Then it is moving inside something like this, then this up and down becomes a channel, like a gutter. A gutter, the role of a gutter is to, we do gutter to actually guide the flow of water. We do gutter to actually guard the flow of water. So whenever you draw a diagonal line, let me use diagonal because it's not diagonal yet. This line is diagonal, all right? So whenever you draw a diagonal line, which we call trend line, and market is respecting it, the bottom line is more or less like diagonal support. The top one is called diagonal resistance. Then there is always a middle, which I call control line. It acts as dynamic diagonal support or resistance line in the channel. Okay, so you see something like this, yeah, like this. Okay, so one day, those who use PC to trade or who be using PC to trade, I will run a quiz, and anybody that pass, I'll give you automated channel. I'll give you automated channel. That helps me a lot, right? One day I'll do a test, and anybody that answer, I'll give you automated demand and supply tool free of charge. I won't take money from you because you've answered my question, all right? So that actually gives you a trend. Now, when it is up, it's uptrend. When it is down, it's downtrend. Then we have sideways, all right? So maybe it moves and it comes to somewhere and it's doing something like this. It doesn't know if it will go up or down, up or down, up or down. Then you draw another line for it again. So this becomes support, resistance. The middle one gives you what? Control line or dynamic support and resistance. Then we'll be expecting either a break above or a break below for me to see a sell. But other technicalities are there. Okay. Now, what are the things you need to see to know market is going up or down? Let me clear this. Today, I wouldn't want to. What are the things you need to know or to identify that market is going up or down? All right. So what you need to see is this. When it is moving up, when that up is called impulse move, like the speed. So let's say first gear, then it comes down by clutching. Those of us who drive a manual, we understand very well. Those who drive automatic, sorry for you, but you won't be able to identify the two. So you clutch and the car will come slow down small. You engage the second gear, then it goes. Then you clutch again, the same way trade moves, all right? In most cases. Then it means that it's going to pull down. But that down will not be sometimes more than half of the movement. Or the low it is coming to create will be higher than the previous low. So it means that when you miss an entry somewhere here, don't jump in and enter somewhere here. A lot of traders, especially, let me use the term retail traders, all right? I'm still a retail trader though, but A lot of people, I don't do that mistakes nowadays. Okay, my entries are becoming better, and I believe yours to be better as well. So most people, they make their decision. Let me use a different color so we can see it clear. All right. So most people, they make their decision on a white line. They made their decision somewhere here. Then market will give you small profit. Then, oh, it's going against me. And those people always set stop loss within just few meters or few steps or few pips away from their entry. Then this pullback will come and kick it. And they say, this broker doesn't like me. It's not true. It's your own fault. So what you have to do is that when market is moving up, wait. It is not a race. It will definitely breathe. If you didn't breathe, forget it. Another opportunity will come. So when it breathes, then you get your entry. It will give you some reasons that I breathe and I will continue. So after you breathe, you continue. So instead of you getting an entry here, you end up getting an entry below. So when you push up again, it's also called another impulse move. It will still do correction somewhere here. Please, if you come and meet it going up again, do not do that mistake again by buying somewhere here. You will experience the same thing. So you wait patiently for it to finish the correction, and then it goes again. The market and the price information knows the number of times it will go. But you realize that the low it will be creating is not going to be lower than the previous low it created. And the high will be going higher than the previous high it will be creating. So impatient traders blame the market for no reason. Then a time will come, let's say it pulls out and push up again. A time will come, you realize that the momentum or the speed is reducing. So you will now see something like this. Then you see something like this. The high will not go as high as the previous one. So we then name this as high. Then you will now see that it starts coming something like this again. Then you now see, okay, somehow equal. All right, then it push up. Now you are not looking for confirmation of it changing direction from a downtrend to an uptrend to a downtrend. So at this point now, you will see some consolidation or choking and all those stuff like that before. Then you now start doing your calculation. This is where people start looking for patterns like M, double top, triple top, head and shoulder, all those things from, okay? They still work in most cases, right? Now, at this point, this is high, this is higher low, okay? This is low, this is lower low, which means that high-risk traders will be looking for a sell here. But sometimes when institutional order flow comes in, the expectation and the experience is different. So if you are an M trader, this is a perfect M. So you get your entry here, expecting that market to come lower than the previous. So once you see this, it has changed direction. Then it goes that way. Okay, so the truth is that as I am drawing it, it's beautiful. But on the chart, it's a different ballgame. On the chart, it is not the same. On the chart, you have to use layers of extra layers and observation to spot. All right, so please, the best time to buy or sell is when market is trending. And when it is trending, make sure to buy after correction. Don't buy when the impulse is moving. No, let it breathe before you go in, so that you don't enter and set your stop loss. Then the briefing will come and take your stop loss and you'll be complaining. One of the tools to really use to understand that is the Fibonacci tool, which we are going to look at, where we have an ABC pattern. You know, some people escalate it and get Elliott waves and all those stuff. You know, there's a lot of techniques people use to go into the market, make their money. So the best is get it right, whether it's a signal service, whether it's your own technical analysis. Always make sure you actually enter the market after a correction, not before correction. That's why I say, I entered too early. I entered too late. Many traders, including myself, said that so many times. I said that yesterday night as well. I entered too early. Sorry, that one I said I entered too late. So I was like, okay, let's see the correction. I analyzed the correction. The time the correction came, I was sleeping. So I only draw a line. I woke up and I realized that, okay, it goes to my correction point. But what could I have done? I could have set pending order. Pending order. But the signal was towards an uptrend. And I analyzed that it will never get to my stop loss, but there is a level I identified that it should respect. So my problem is that buying there and then seeing it come back there is my problem. So I want market to get there before. So if you see something like that, then you go in for the pending orders, which we have already treated. All right. So that's it for today. Very simple. I believe that you guys are seeing it that Forex is not actually difficult like they used to tell you. Very simple. Just follow the rules and you're going to make a lot of money and buy your Lamborghinis, you know, drive your Bugatti and all this stuff. Now let's look at this here. This is a 50-minute time frame. A lot of people will see this as a W. And the question is that what happened? What happened? Now, this is an extended W. So when you use the lows and the high concept, there's a layer of choky here because it gives the same structure here. It didn't respect it. My people, the winning power is on your eyes, even before the formation. The same thing happened here, and then it dropped. The same thing happened here. It buy a little and drop. And we saw something like inverse head and shoulder forming here before push up. Then we saw something like, oh, okay, this one there. So a lot of people will buy here. A lot of people will buy here, put their stop loss somewhere here. This will clear it. A lot of people will buy here, put their stop loss somewhere here. It will clear it. A lot of people will buy here, put their stop loss somewhere here. It will clear it. Now, this is the real move. So the question is that, how do you now know this is the real move? This is the real move because, simple. The low is created. This is the lowest, and this is higher than this low. You wait patiently. This is the best confirmation, and you buy here, or you buy here. You will make your money. Thank you so much for your time. There's a question. Let's deal with that question quickly. Yeah, we call it tonight. Today I was very, very busy and tired at the same